Hello, my name is Wim Levis, and in this little video I would like to present you my newest tool, WL SuperFive, in the ProRealTime platform. As always, I will do this with my PowerPoint presentation, a recording of course, and I will talk a little bit more about my trading philosophy, analysis, the strategies, and of course show you practical implementations with the tool. So let's begin with the presentation, right? Okay, now as always we have to start with the disclaimer, something that I personally take very serious. When you trade products on margin, CFD, forex, futures or others, you should know the risks. Beware that the positions that you might take are substantially larger than the size of your account, and this can be a good thing but also a dangerous thing. So please study this very carefully, know your products, test all these things into demo accounts is something we can do these days, so that's a bonus. I would say use this time, do it step by step before putting real money on the market. If you have any other questions about this, you always contact me through my website, mytradeclass.com. It goes without saying that if you have any remark, question regarding this product, please don't be afraid to contact me. Now, why use this WL SuperFive tool? Where does it come from? Now, those who have seen some of my videos on YouTube know that I'm a big fan of trading price movements. So I like things that are simple, with a structure, and just price, and to some extent volume based. So I do not use a lot of indicators. I think is something that we maybe should do better without. So this tool is based on price movement. I coded 5 different strategies into the tool. You can use those on all instruments which are, I would say, liquid enough to trade, on all time frames, even on movement or range bars or whatever bars you might be using. So it's a universal product. You can set alarms, of course, and even activate auto trading or automatic trading. Now, the most important feature, I think, is that this tool will avoid over trading, or it will make people trade less, but hopefully better. But over trading is a huge issue, and we'll get to that in a minute. So few topics, my trading philosophy, and then which I've all written down in an online course which is done extremely well in Europe and is now available in English as well. What are the topics that I like to address? Let me first say that I've really tried to write something that is structured, comprehensible, and practical. Something that you can listen to, you can do the exercises and the coaching and so on, but you actually know what to do. It's not like 20,000 pages of theory. I have proof of this in my office here. I have a huge closet here to the left of me, where there's about 250, 300 books in there about trading, and yes, I've read them all. And we should use the stuff which we can actually transform into something practical, and that is what I've tried to do. And I talk a lot about price movement instead of indicators, market structure, something that I think everybody should know, trading time versus movement. We'll talk about that. Time frames, how to combine time frames and how not to combine certain time frames. Money management, of course, and then a lot of practical trading. That's what I've tried to do. And the tool you see here, or I'm presenting here today, is actually the practical use, implementation of this philosophy. Now, few basics. Again, I like things that are simple. Trading is difficult enough. It's difficult enough to implement to perfection something simple. So trying to implement something that is difficult is practically impossible for most people to do. So you should have something, strategies, analysis, which are easy, comprehensible, practical to do. And for that, you should know the trading ABC. This is basic stuff based on price movement, how the big boys, the big companies, the big traders, not people like you and me who trade with 5 or 10 contracts, but the big companies who move markets, how they look at markets, how they look at charts. That is what you need to understand. That is one. Second, price tells, I will not say 100% of the story, but will tell us a lot. Volume also. So if you know how to read those two, you are 80-90% there, right? The issue is that many traders go one step too far and start with indicators immediately, and I'm trying to explain why this is maybe not always a good idea. Now, what makes a successful trader? What will make you succeed? Well, 20% it's an analysis and a strategy, a good analysis, which fine is important, and of course you need to do this right, but it is only 20%. Money management is actually more important. I would say 30%. And if you know how to implement these two correctly, if you're disciplined, if you have your emotions under control, and that is 50%. But it goes without saying that in order to achieve this discipline and to be strong enough to trade, you have to be solid when it comes to the analysis and the strategies and to the money management as well. Now, this tool will help you with that. It will absolutely help you with that. And then, of course, one of the principles in is what I do in all my trading courses is, and you can see this because I do a lot of live trading, so there's no talking about the past, but it's just real time, is practice makes perfect. It's very simple. There's no way that you can learn something if you're not going to try it out, if you're not going to practice. It's like, riding a bicycle. There's only one way to learn this. It's to get on the bike and just, practice. And will you fall sometimes? Yes, that's part of the game. Same with trading. So this is some idea of what the agenda looks like on the topics. But again, if you have questions on this, you can always contact me through my website. It's a number of videos. Again, I've worked very hard to put this together, and the challenge was not to put in as much as possible. The challenge was to put in the important stuff and to make the distinction between what do we really need, what do we really use, and how can we use this in a structured, practical way. Now, few points on price versus indicators, chart analysis, market cycles, trends and ranges. It is just, of course, just a few slides from the course, just to try and explain to you where this tool is coming from and what it is trying to achieve. Now, the most of you know this slide but it is oh so true, because you probably saw it in the disclaimer. In Europe today, 70% of all traders lose money. So, and this is actually, when you think about it, it's strange, because we trade relatively small positions, we can surf on the markets, platforms never have been better, you can get in, get out with a mouse click. There's all this information out there, there are all these books out there, there's all these strategies, indicators, everything is out there, and still 70% and sometimes a little bit more actually lose. Now, we're missing something here. We're doing something wrong. And this is an example of an analysis I had a few years ago of one of my students. And this is in no way to make fun of anyone or anything, but it shows that sometimes this is an issue. And why do we have all these indicators and systems and complications, and it's like an endless voyage on the look for something that will show us what is happening, and I don't think the solution is in the indicators. I think it's in the price movement, and to some extent into volume. Yeah, because what happens, why do we use these indicators? Very often it is because we do not really know or understand how markets work, what the job is of these huge movers and shakers, how they look at prices. They don't use indicators, they look at price. They look at different things. You have to understand and learn to some extent how they do this, and this will help you tremendously. Now, this is very important, and again, I didn't invent this. This has been, very known traders, analysts for all parts of the world have written about this for the last decades. It goes back a very, very, very long time ago. But this is the stuff you should know. And if you don't know this, what you do, you're uncertain and you go on the look for indicators. And that's where, to some extent, problems begin. Why? Because these indicators sometimes have some sort of a dogmatic character. People have seen examples of where these indicators have given correct signals, and so they think this will always work, which it doesn't. I always say, show me one example where it worked, and I'll show you two where it didn't. Why is that? Because you have trend indicators, and you have oscillators, and even other types of indicators, but they will only work under certain market conditions. And in the other market conditions, they just won't work. They just won't. Also is that indicators very often come one step, sometimes two steps too late. So it is like an optical trick when you look in the past and you see this indicator giving the signal and you see the price which did exactly what it should have done. In reality, it's when this signal is given by the indicators, the price very often has gone a lot further than you would see in the past. So then the business model is not that good anymore. I will repeat this several times during this video, how important it is to get in the market as soon as possible when the signal is given. Now, I don't want to break down these indicators completely, because if you using a certain indicators and it helps you to clarify the visual, the image, or show divergence, for example, well, that's all good. There's nothing wrong with that. The only point I'm trying to make is 80% should be price and 20% should be indicator, and not the other way around. Okay, that's all. Now, we try to look at this in a structured way and try to recognize trends, ranges, market cycles, key price levels, fair value areas, control, excess prices. There's all these things we try to recognize, and we can see on charts where there's nothing. There's just candles, just price. You can do this on any time frame. You can do this on movement card. You can do this on Renko, on range bars. You can do this on anything. But this is something that you can do, and I think it's very important that you learn this. Why? Because many people trade and analyze at the same time. Now you will say to me, well, when that's normal, you know, I look at it, I analyze, and then I trade. And I understand what you're saying, but what I would like to do is to just take a moment and explain that these are two different things. Analysis just answers one question, or should only answer one question. Are the conditions to trade now okay or not? Do I have, as they say, an edge? Yes or no? If you do not have an edge, don't trade. Don't. Just wait until, you know, market conditions are good or good enough to trade, and then you take a strategy from your pocket and wait for the signal and trade. So it's two different things, right? So this whole analysis and looking at prices in a structured way just answers this question. Should I be trading, yes or no? What I've tried to do in the tool is to include this as much as possible, so it will help you to make these choices, right? So I just show this by you know, just to explain that there's just a few things you should look at. You could, very simple, draw a trend channel, see where you are in the channel. Can you draw a decent channel? Which direction is it going? Can you draw a control price? What are the movements you can see? Is there a fair value area? Where are you now? Are you in a fair value area? Are you in an excess zone? These are all things. This is basic stuff, and also surely during the coaching session I will elaborate on this with you, but this is important. Market cycles, most people know this stuff. Now what can a price do? It can go up, it can go down, it can go sideways. Sideways can be neutral, or you can have some pressure to the upside or some pressure to the downside. Upside is called accumulation, downside distribution. Now, if you know how markets work, you understand that there are substantial volumes being traded where the big players are accumulating positions or distributing positions. Now, these are not the areas in which we want to trade, but we have to see it and be prepared, right? And also, when the movement happens after an accumulation or distribution, this, of course, will give us an edge to trade. Because what are we trying to do, basically? We're trying to recognize trends, and preferably young trends. Like here, this is, you know, these are things that you must have heard like 1,000 times. The higher highs, higher lows, or lower highs, lower lows, which potentially are the beginning of a new trend. Good. Now, will this trend run? Will it run, you know, big distance? Will it be? I don't know. But when I can capture these moves in the beginning, sometimes they will, and then with a risk for you know, $100 or €100 or whatever, I can make substantially more, and that is the whole idea. So from a business model perspective, for me it is important to catch these moves early, right? And also there the tool will help me. Now with these trends, I must say also most of my students, they do pretty well. I have to say This is something that most people can learn quickly, and also with the tool, they get along very well. The real challenge, and even more important than the previous slide, is this. Is the market conditions that we should avoid, sideways or the ranges. Now, what I've drawn here is completely useless. Why? Because the range is underway. Look at this image here on the left, on the bottom. It's gone 3 times to the upside and already 3 times to the downside. And if you would have traded every one of these moves, you would have lost 5 or 6 times. So that is also what I see in books very often. There's no point. It doesn't serve my purpose. I have to see this a lot sooner. And how do I do this? Well, give you a trick. And again, I incorporated this in the tool, but I use the exponential moving average 20. And basically what I do is, from the moment I see that the market is trading both sides, even the first time, on both sides of this exponential moving average, more or less at the same distance, there is no direction anymore, and I assume that the trend move is over until the trend move starts again with higher highs or lower highs, lower lows, etc. So the thing is, because let's face it, markets are in a sideways or ranges, what is it, 65% of the time? So they actually stay in ranges longer than they are in trends. Now everybody wants to trade, moves and hope or think it will go in one or other direction, but we want to do this, but when we see it, and not when we think, we hope, or when we believe it, right? So, and this way of looking at markets will help us to only, trade, and especially trade or look at markets as professionals do, meaning that we will really, and I know this, people always say this, and buy low and sell high, and all. When you listen to it, it's been said 1,000 times, but more than 70% of the traders lose. So there is some groundwork to be done in order to see this on a chart. When the indicators show that it's going down, but the price analysis actually says, for example, that it's going up. That is what I'm trying to do. And again, I have tried to put this as much as possible in the tool. A few words about the basic price movements, time versus movement, trading time versus movement, price action trading, and of course my strategies. Now, I know that there are a lot of strategies out there, and I'll come to that, but could we just agree for now that there are not as many things that a price can do? A price can be in a trend, it can be in a range, it can test support and resistance levels, it can break out. Maybe there are other moves that can be described, or subcategories or something, but short of the long, that's it. There's not a lot more. And you look at this drawing, what can it do? So when you look at a chart, that is the first thing you should be looking at. All right? Good. Now, time versus movement. Those who have seen me trade will know that in day trading, I will prefer movement bars, trading movement over time. Why is that? Because I am a day trader, so my positions go from minutes to maybe sometimes an hour and a half. I started trading in 98 in the States, and then I did swing trading. I traded on daily candles. So my positions were back then one day when I lost, immediately, or up to 7, 8 or 10 days. Now, to be totally honest, the moves that I trade today are basically the same, but they're just on shorter time frames. Now, whenever you're trading, I would say on shorter time frames than 5 minutes, maybe even 15 minutes, I honestly believe that movement bars, I will call them like this, but you know these, Renko, range bars. I created some myself, also for the ProRealTime platform, WL bars, which are a combination of Renko, range, and Heikin-Ashi bars. They combine, I think, the best of these three, but the idea is the same. The bars are not built on time, but on movement. And this has a few, I think, for day trading, huge advantages. When there's a lot of movement, you will have a lot of bars. When there is no movement or little, you will have little bars. And that is, to me, is an advantage. Why? Because I don't have to look at too much noise. So recognizing trends and recognizing sideways markets becomes a lot easier. Also, since all bars are the same size, in order to pinpoint my entries precisely is a lot better. These bars, these setups are more precise. Also in the money management, since I know exactly how tall the bars are, I know exactly what my risk is, and it will always be the same. Because if I, for example, take 2.5 bars as a risk, well, I know how much money one bar is, so I know more or less how much risk I have, one tick more or less. This with time charts is a little bit more difficult, because normally you have to set stops under a certain bar. This bar can be large, can be small, so it's not 100%. And also when you take a fixed amount of money or of points, I think that is a mistake, because then you are not in sync with the volatility of what you're trading, which is another issue, but that is something that should be avoided. So I think it has a lot of advantages, and for day trading I would advise to trade with those bars. Now, this has nothing to do with this tool. The WL SuperFive is used for day trading. Some people use it on 1 minute, others will use range bars, but is also used on 60-minute or daily charts. So that is another story. But I mean, and here you see these triads, which are also known, and basically it's a combination of 3, in this example, WL bars, but you can use range bars for this. You could even use Renko. I think Renko is not very precise. I personally prefer range or my own bars, WL bars, but fair enough, the principle is the same. Now you will see that when you use the range bars on the WL SuperFive, these formations, I should say, will give you certain alerts, will give you certain signals. So we have actually programmed those in. I will show you later. Now, I'm not gonna talk a lot about trade management. That's not the purpose of this video. I just want to make one point here. That is, do not trade above your, I would say, pain level. I always ask, first question when I develop trading plans with my students is, the first question I have, what is your comfort level? And with comfort level, I mean, which amount can you lose 3 times in a row? Now, we don't like to lose, and especially not 3 times in a row, but it will happen. And if you lose 3 times in a row, you should be able to keep your cool, not, start revenge trading or worse, and you should be able to do your job normally after. So if that level is 100, fine, it's 100. Do not trade with 200. Stick at 100, no matter what. Yeah. Also, when you've lost 2 or 3 trades, don't increase that amount, double it. Don't, because sooner or later it will end in tears. Okay, so what's the pain level? Do not trade above it. Now, I'm not going to get into this. This is not something that is for this fight. The price movement, okay. We want an edge. We look at the market reversals. We look at movements. We look at market structure. We look at accumulation distribution. We look at control price. We look at, anyway, there's a whole checklist which we can discuss during the coaching session, which at the end should just answer this question: hey, should I be trading now, or doesn't look very interesting at the moment, so stay away. Not entering the market, not putting your money on the line is also trading. A deliberate choice of not entering the market is trading. Staying cash is a position, okay? So, okay, and now we get to the real stuff. Now, this is a very important slide, something that I've learned over the last few years with my students, and these are actually the challenges that most of us have to deal with. Now, one of the things that I see still is that people will trade when conditions are not very good. Trading when there is no trend or little trend or even against the trend. I see this less, but it happens. Remember the 70%? Well, this is where you see it. Entering markets after signals, but where you are too close to certain support resistance levels. Now, these support and resistance levels can be previous day high lows, pivot levels, it can be a volume profile, there's other stuff, but if you have important levels, do not enter against them. Just wait until they've been taken out and then you trade. It's not worth it. You should be able to make substantially more than what you're risking. So therefore here, this is not to your advantage, so stay away from it. One of the biggest issues is number 3, and this is actually one of the reasons I developed this tool, and I use it as well, is the fear of missing out syndrome. Is actually seeing signals everywhere, being afraid of missing one, and the frustrations that come with it when one or other move has not been traded. You have to get over this. The life and also trading is about choices. And what in the end you will have to do also with this tool is to decide, okay, what am I going to do with this tool? And especially, what am I not going to do with the tool? So it will help you, I think, make this choice more precise, and hope will help many traders in that process. What I also see is entering trades too late. Now, you probably guessed already why that is. That is why, because people use indicators, sometimes different indicators, want indicators to confirm indicators, and then when all indicators point in a certain direction and you enter the market, you are 1 or 2 steps too late. So this is something that I see. Gambling less is a good thing. So this trading the news and putting stop and limit orders on both sides, and you know, with the high volatility, think you're gonna bad idea. Just don't do it. Not when there's news coming out and a lot of volume in the market. The executions are not what they should be. So be careful with this, right? So is something that I would stay away from. Now, the strategies. And again, this simple picture. Now, what can the price do? It can, correct in a hopefully beginning trend. it can break out. It can test support and resistance areas. It can do these breakout impulse moves, momentum moves, or trends can reverse. Now, there might be other moves, but you know, I would really have to look for those because I honestly wouldn't know what they are. And what I also say is there are thousands of strategies out there, but at the end of the day, you can pick any of these strategies, almost any of these strategies, and put them in one of these categories. So let's try to make things, well, trading will never be simple, but let's at least try to have, you know, to keep some focus here and put this in perspective. Okay, so these are the 5. Now, what I will explain now is how these charts, what the charts look like, what you see on the charts. And it doesn't look, maybe it looks nice, but it looks very clear, but there's an enormous amount of information on one chart. Yeah, and it will help us also. It has helped us to, you know, build these algorithms and to create alerts on 5 different strategies. Now, we'll talk about WL trend, WL volatility, of course the algorithms, the strategies, and then practical implementation. I'll show you on the platform, also show you a few alerts. It's actually very simple. Now, we've done this in the SuperFive anatomy. How does it look? Now, I just want to talk about the trend and the momentum. And what you see these, you know, how should I say this? Clouds, the green and the red cloud and the blue and the magenta cloud. You can change all these colors. That's not the thing. I just want to explain to you what they are. What I've done with the WL trend is I've actually programmed 2 correlated time frames, one on another, in order to make sure that there is no mistake about the trend, which direction it is going. Now, you know I use the EMA exponential moving average 20. Now, it is not exactly that, but it's close enough. And then there's the other line, which actually is a calculation of the exponential moving average 20, but in a higher time frame. Yeah. Now, certain time frames are correlated, others aren't. So, for example, you can't correlate a 1 minute time frame with a 60 minute. That's too far off. But you could, for example, correlate 60 minutes with 4 hours. Actually, this is what it does. So, when you see this, you can never be wrong about the direction. You just can't be. Green is upwards, red is downwards. You can also see if trends are getting stronger or not, or weaker. Yeah, and this is what we want. This is what I want to see. If I want to see the beginning, so when the color changes, and then I want to see strength, and that is where we programmed the signals. The other channel you see is the blue and magenta, and that is the WL momentum, and it shows impulse, it shows price movement, price change, and also the relation of this momentum compared to the trend will give us the opportunity to program other signals. Now, what is even more important, and it's not shown on this screen, but what is even more important on this is the combination of these 2 will actually show us when not to trade. What is even more important? Even you might get some signals, but they, by knowing how to interpret these 2 clouds, if I may call them like this, will tell us also when not to trade. We've taken as much out as we can with the algorithms, but still it's very important that you understand this. Now, how do we set this in ProRealTime? you have these configurations. You just open the SuperFive indicator, and what you see here, you see on the top here, signals wanted. Hold on, see, yeah. Well, it just goes to corrections, but I just want to go here, signals wanted. Now, you will hear from me that what I absolutely want to do is get signals early. I want young trends, young momentum moves. So if I say, well, yeah, I don't want to trade 9 corrections, that's too much. I want 2 or 3. So I'll change that number to 3, and then it will just give me or show me 3 alerts for corrections or for momentum. Okay, that's what I do. I actually put the number at 3. If with some of my students who do momentum, we just put it at 1. We just want the first one. Okay, now I have corrections, I have momentum, I have breakouts, I have reversals, and I have support and resistance tests. And of course, with support and resistance and with breakouts, I will have to, and you see this here, support level, resistance levels, breakout upper, breakout lower. I have to set the level. So I can actually draw an area, and when I get certain signals within or just outside that level for breakouts, the platform will give me an alert. That is how it is built. Now, just simple. Now, about trend corrections, which is one of my favorite strategies, because I honestly started with this in '98, and this was one of the first ones I learned. Now, are all the corrections good? No. Which one should we trade? As I said, the young ones. First correction, second correction, also minimum 30% correction. And when the WL trend is in a certain way. Now, again, we tried to put that in as good as we could. There are actually 4 different signals for trend corrections in the SuperFive for ProRealTime. Okay, now this is a very interesting move. The idea is very simple. You have the beginning of a trend. Sooner or later, very likely, you have a correction. Well, when you see that correction and the market turns again or starts turning again, platform will give you a signal. It is often a good signal. What is not a good signal is when you, for example, have correction number 7 or number 8. Those are things you should be careful with. Now, you see here, clear example, green going upwards. You see that the momentum is going down. You see the magenta, and then the magenta becomes blue again. That is a buying signal. That is one that I like to do. We also need to get the signal within the clouds, and we have pretty good results with that. Here you see the same thing. Markets going down, red WL trend, magenta going down, then momentum going against the trend, and then changing again into magenta, and that is when we get a short signal. That's how it is set up. Now, on reversals, most people know this. Look at this divergent signal on top left. That is something that we try to copy with this signal. And basically what it is, and I'll show this to you on the screen. This is something that I like. You see here, for example, the WL trend is converging. You see higher lows, and then you have this break. And that is when you will get a signal. You can see it here. This is a ProRealTime example. You see also the tops, which are getting lower. Yeah. You see the WL trend converging, and then you get a break to the slow line of the WL trend, which will trigger a signal under certain condition, which in this case is a reversal signal to the downside. Okay, then the momentum. The momentum is a strategy that I have developed a few years ago already, quite a long time ago, 7-8 years ago, out of pure frustration. I was so fed up missing certain movements because I saw the market move like crazy, and I wasn't in it. I missed the move, and well, it's very difficult because you don't know exactly when this move's going to come, and then when it comes, you say, oh, now I can't get in. And what momentum trades do, or the way I set this up, it will, under certain conditions, not always, give you the possibility, when there's a small hesitation in the move, enter the market anyway. Now, this is a strategy, in my opinion, that will work best with movement bars, because time bars, well, they need their time to complete. So signals are less common, I have to say that. But with movement, with range bars, for example, this is a great strategy, because sometimes you get a strong move, so you have different bars, then it hesitates a little bit, and that gives you a signal to enter on the long side. This is actually, the signals are given, you can see this here, on the WL momentum. Yeah, so you see these triads on the WL momentums, which under certain conditions will give you buying signals. You can do it long, short side, but remember, very important also with this strategy, to try to get them as soon as possible. So do take the first signal, maybe the second, but after that I would not enter, because very often the market will have moved too far away. Support and resistance tests, and this is a great little application. Why? Because this is where people who trade on the longer term, 60 minutes, 4 hours in forex, daily charts, I can do this, gold, oil, whatever, certain stocks. When people think, also with, for example, volume profile, they think, well, certain levels will be tested again. And then you can set the level at that, the support and resistance level at these areas. And what this will do, what the tool will do, is when you get a certain signal in this area, it will trigger an alert. And how will you get this alert? Well, if you sit in front of your computer, you can get, you know, a normal alert, some sound, which you can set in the platform. But what most people will do here, of course, is you just have a text or have an email, because these are longer time frames, right? So you don't need to be in front of your computer all the time. So same here, you see, you have to put in the support and resistance levels yourself. You have to put in the values. You can see it here, how it is drawn. You just put in the levels. These levels are drawn on the chart. And then when you get a certain signal, it's actually a WL momentum signal, which is actually built in such a way that it is a confirmation of the test. And that is important, because you just can't say, well, if it touches this area, I'm going to enter. This is not how it works. There should be other conditions involved before we enter the market. Same with breakouts. Many people try to trade breakouts, and trading breakouts is a great strategy with lots of potential, but many people struggle with it. Why? Because people do not know where to enter. They see the area, they see, think they see, and very often they're right, where the market could go. But then they set these orders just outside of the breakout level, and we all know what happens. 75% of the time they're taken out, they shake the tree, everybody is out. They do this a few times. Now people can afford this 2 times, 3 times, and then mentally they can't get in anymore afterwards, because you know they've lost some money and they're afraid to enter again. And so what this will do is to trade this or give you at least a signal how it should be done. The best and safest way is to wait for a new high. That means when the level actually broke, and when it has a small pullback in the area or not, and it takes out this level again, that's where you want to enter. We've tried to imitate that signal as much as we can. Will it always trigger? No. Why? Because these conditions are not always met. Yeah, but at least it will keep you out of most of the not so good signals. Yeah. What can also happen is that it breaks out, it corrects, and then you trade a correction. That can also happen. Nobody knows what exactly is going to happen after a breakout. The only thing what is important here is that you avoid being triggered in too quickly and too often. Okay, good. Now here, small image to explain this again and again. You can fill in the breakout and the breakout lower level. What I would do, especially with these last two strategies, with the breakout and with the support and resistance level, to just set, I haven't said this here, I put it, you see on the top here, it says long signal, short signal. Of course, when you want to trade a support level, you will only activate the long signal. Activating the short signal makes no sense. Okay, good. Now, a few of my favorites here, but I'm not going to get into these now, but I just want to make one point. The SuperFive trading tool will give you an enormous amount of possibilities. Different products, different time frames, movement charts like with range bars. You can trade on one instrument, you can trade on 12 instruments on the same times, put in alerts left, right and center. One or other strategies, only on the correction you already have 4 different possibilities. Now, what I'm trying to say to you here is that the hallmark of a good trader is a trader who can make choices, who will choose to do certain things and be a specialist in certain things and not do the others anymore. Trying to do everything left, right and center doesn't work. So you will have to make choices. Now, I will help you with this ask you a few questions in the coaching session in order to help you, in the right direction with this. And you can always contact me about this. But just to make the point, having this superb tool is one thing, but you will have to make certain choices. Okay, good. Now, practical implementations, just to give you a few ideas. You can trade with range bars. You can on time bars going from literally seconds to days. You can trade on 4 instruments. You can trade on 9 or 8 instruments, 12 larger time frames. There's plenty of stuff you can do. So we'll talk about that. Now, what you can also do is, especially when you're on the higher time frames, is put in alerts. ProRealTime has a superb little tool about setting alerts. I will show you in the platform how you can set those. It's very simple, very easy to do. Okay, now these alerts, I will just show you on the presentation first, and then we'll do it in the platform. Now, you see here, you just click on this little bell here, then this window will open, and then you just go and activate the SuperFive signals. You put in previous period. Why? Because we want to trade the confirmation of the signal. You put in value equals, and then a number, and you see on the right whatever strategy you want to alert: corrections, reversals, momentum. support and resistance, or breakout. Of course, you can set different signals, several, and they will be accumulated. I will show you. It's very simple to do. You can get the message by, a sound if you're trading in real time. If you want to let the program or the platform run some on the back burner somewhere and you're not at your desk, you want to get a text message or an email, you know how to do this. It's you can receive a notification. So it's very practical to use it in this way. I will continue with this later, but now let's show this on the platform. And I just take this. It runs in real time at the moment. You see it gave a sell signal here. It's not prepared. Here's a buy signal. You see, buy, sell. Is giving me a sell signal here. Okay, so now to import this is very simple. When you have bought or when you buy this pack on the market store, you will be able to import this as an indicator, and it takes a few seconds. If you're having difficulties with that, I'm more than happy to help you with it. But I added a little video or the link to a video. It's very simple to do. And when you import this, you get this, and then you see the tool. Yeah, and as I said before, long, short signal, signal wanted. Remember, we wanted to put them at 3. See, you can put them at 3, put them at 4, and so on. You can do what you like. Here, this is something I need to explain. You have 4 signals on the corrections, and that's something that I need to share with you. Now, when you are trading with Japanese candles, with 5 minutes, 30 minutes, 60 minutes daily charts, I would advise you use number 4. It is in my opinion, for this type of bars, the best signal, because the signal is given on the WL momentum. The other signals 1, 2, and 3 are actually given on the fast and slow line of the WL trend. 1 means fast line, 2 slow line, 3 means fast and slow line. Now, this is very interesting to use, but I would use those only with range bars. You can use them with Renko probably as well. If I use them with some of my students, it's on range bars. Okay. Wouldn't use these. Why? Because they will recognize market structure points, and with time charts or with normal candles, you can have very big and very small candles. That kind of messes up the business model. So it's better to use something like these for these charts, to use the normal WL momentum. Apart from that, all the other stuff is the same. Support level, resistance level, breakout, upper, lower. You can all set this how you want. Very simple to do. Now let's just see what I put in here. Hold on. I just put in I put in reversals and corrections number 4. That is what's running at the moment. Now let's do an alert. Now alerts, for those who haven't done this in ProRealTime, very easy, very simple. You have this little bell here. You click on the bell, you drop it in the chart, and then you get this. And then you say, okay, I want to have the SuperFive signals. I want the previous period. I want the value being equal to, and then I say, for example, reversal, and that's the number 2. Number 2, create alert, and you're done. You want another one? good. Oh, where is it? Now it's gone. Hold on. So take this one, another bell, click there, drop it in there, here. Take SuperFive signal again. I take previous period again, equals. Value is, for example, 3. Create alert. You want to see where they are? You have here the little bell just on the top. I hope it's not too small, but you double click on that and you have your 2 alerts. You can modify, you can delete. It's very intuitive, very simple to use. Signals, alerts, it's all there. Of course, I'm sure you will have many questions, but those will be addressed in the coaching session I do with everyone who buys this tool. Now, if you want to have more information, you buy this tool, you go to the marketplace of ProRealTime. I've put in the link. If you do not know yet how to import an indicator, I just added the little video about it. It's actually it's very easy, very simple to do. So there it is. Okay, now YouTube, there are 250 to 300 videos already on YouTube, agreed. They're not an enormous amount in English, but that will change, I promise, in the next months. But if you want to check out, please go to my YouTube channel. It's all free. Few tips before I leave you. First of all, try to understand this analysis. I will take you through it during the coaching session, but it is vital that you can look, at least to some extent, understand what is happening when you look at a naked chart. Specialize yourself into 1, 2, or 3 setups to start with. Don't try to do everything. Trade below your emotional pain threshold. Don't push it. You can, once you build up your mental capital, you can push it, but go easy in the beginning. Yeah, I would use a money management. I like to scale out. I'm not saying you should scale out, but what I want to say about this is that we should always trade or try, when we enter a position, go for more than we are risking. And I need to see on the chart there is a relation between, or a risk reward if you want, for 1 to 3 minimum. If I can't see this on the chart, I am not trading. Yeah. And remember, don't play or gamble. We are traders. We are not gamblers. So, in conclusion, we only trade when we have an edge. In this tool, it will help you see that edge. We use analysis, EMA 20, 110, to determine trends, trend strength, and direction. Even with all these beautiful presented tools, where you can change colors and have all these signals, remember that in trading, losing trades is normal. This will also be the case here. So it can improve the quality of your trades, but you still will lose some trades. Please don't turn this into a black box. It's a toolbox. Okay, I want to make this point. Try this, trade this, play with this in a demo account. And once you are finding the setups that you like and which are succeeding, do it step by step. Be patient. Build up your mental capital at your own pace. All right? So, thanks again for your interest and for your vote of confidence. I really appreciate this. And remember, only trade what you see. Bye-bye.